All right, this is your market recap for April 4th, 2025. Today's going to be a relatively short one as we had NFP and Powell speaking, so markets didn't move much today. But as you can see on the daily time frame, if we scale this, I need to go even larger, this whole move right here, right there, this is equilibrium. So if we're looking for places to turn around, we're good. Like we can turn around. We have this monthly fair value gap that we could reach down to. That's where I could see us turning around if we don't take this liquidity as turning around. Now in the hourly time frame, looking at today, this is 20% weekly range retrace as of this low, and this is 30%. So starting off the day, those are my targets, but obviously they got hit pre-market. So since the 20 to 30% retrace got hit pre-market and it continued to show bearishness, my bias was bearish for the rest of the day. Now if we go down to a 15-minute time frame, we can see better. We take out this low, actually, on the hourly, it shows it too. Sweep this low, like we close right at it, dip all the way down here, but we close above it. So on the 15-minute, this is what it looks like here. We come back up into this 15-minute fair value gap right there, but also tap into this 20% retrace of the weekly range, and then we continue bearish. Market opens here. You can see not really much happens. We take out this low, come up off that, deep retrace, lunch plays bearish, takes out this low, retrace. Very, very slow day. Same thing. You can see this reaction here. Here's 9:30 market open. Came up, check out these highs, played bears. Reversed during the macro. We made this high here, played bearish, take out this draw on liquidity there. Then during this macro, we retraced up, taking out this liquidity, staying within this 5-minute fair value gap. Expanding lower. Lunch happens, so we're coming to take up buy side liquidity, internal buy side, to continue the bearish move. We then react off this 5-minute fair value gap, another macro, continue lower, with this being the draw. Take out this low here, and then we start retracing up. If we're going to continue what AM session started in PM session, we need to take out internal buy side liquidity, which is exactly what we do here. And then this 5-minute fair value gap keeps us in once and twice. So very, very slow. I'm going to draw trend lines, but don't think they mean anything. You can just see we're just like slowly going downward. And that pains me to do that, so I'll do it here, right in the middle. Boom, right? We're retracing a lot, but we are still heading down. Now in the 1 minute, there's really not much. No SMTs. Well, yeah, no SMTs. All the retraces happened around the macros. Boom, come down to take out this draw on liquidity and this one. Hit those, retrace up. During the macro, we reverse. Come all the way down with this is the draw, sweep that, immediately come up off of that, looking for internal buy side, sweep that, show lack of desire to continue up, staying within this 5-minute fair value gap. Driving lower with this as a draw, take out this, retrace up to this 5-minute once again during the macro, and then now this is our draw with us reacting off this 5-minute, and so we come all the way down to there, take out this low. Kind of during the macro, we reverse. Here's this equilibrium of that large higher time frame range. We come up, algorithm resumes at 1:30. We're looking to target internal buy side if we're looking to continue the bearish move that AM session started. So we take out this liquidity here, once again reverse during the macro, seeking this as a draw on liquidity, hit that, retrace up once more back into this 5-minute over there, reacting nicely off constant encroachment. Before continuing the last move for the day. So, review of NFP Friday, definitely tradable if you have the experience. I could definitely see how you get ripped up here. for example, this whole thing is in the macro. How do you know that this sweep isn't going to be the leg down? It did even have a change in market structure there, but it was waiting for this, right? So how do you know that? Experience. Same with this one. This one started off boom at perfectly the beginning of the macro. With little experience, you might have seen this one and said, okay, let me wait for, a little later in the macro. It's already gone. Same one here, started at the beginning. This one didn't even encompass this low. This one was towards the end once again. So it takes a lot of experience to trade just based off of time and price alone. And I'm not there yet either, which is why I did not trade today. I'm hoping to get there at some point, but for me to feel safe and confident about a trade, I need to see an SMT, and I didn't see any today, so did not enter. And I'm okay with that, right? Days like this, high news days, where the hand is in the market, not where I want to be risking my capital, both mental and physical. So, looking into the future, kind of mentioned it earlier. There's this big imbalance here. We did hit equilibrium of this big move here. So if we retrace, or if we switch to bullish off this, I'd be okay with that. But I could see us driving down here early next week, maybe even the entire next week, and then coming up out of that. I think we're close to the end of this bearish run. This is a pretty significant retrace, but it's well needed. We were super overextended, and hey, I'm not even mad about it. This big retrace allows me to get in a low price and ride the wave. So, yeah, looking to possibly draw down to here if we don't see any reversal signs off of this equilibrium here. So this has been your market recap for April 4th, 2025.